one stock which has been surging not just today but all of this month and this year is an unusual mover, and that's the special offering that we have today for you. Coffee Day, which is up nearly 10%. That's the 10% move that we're seeing today. But if you just take a look at it, the unusual mover that the stock is, this month itself, it's up 45%, and this year it's up 120%. And because of its vast moves, the stock has been put by the exchanges in the additional surveillance measurement, ASM stage 1. So that's something we need to keep on our radar. For those who are questioning what exactly is happening with the company and why is it that the stock is up 45% this month, the exchanges made the same question to the company, and the company said to the exchanges last week that movement in the price of shares is purely due to market conditions and is absolutely market driven. The management of the company is in no way connected with any such movement of the price of the share. Additionally, as the start of this financial year began, there was another disclosure on the exchanges telling you that there is 434 crore rupees worth loan/interest payments that the company has defaulted upon. The company to that has said that this delay in debt servicing has been due to liquidity crisis, and as of December 31st, the group has borrowings of close to 1,337 crores. So one is wondering then, for a company that is laden with debt and has liquidity crisis, what is it that is causing the stock price to move higher? I looked at the fundamentals. First 9 months of this year, revenues are up 14%. The EBITDA is up 60%. And they've reduced their debt from a year ago as well. And that's reflected in their finance costs, which have come down from 58 crores to 37 crores itself. How did they go ahead and do that? One, they are selling some of their assets. They sold a corporate office building for which they got an additional profit of close to around 56 crores. And the other steps that they've taken to improve their operational performance or reduce expenses is one, they are reducing the number of stores. So same time last year, the number of stores that they had were 480. Now that's come down to around 454. That's Coffee Day stores. And what they're doing is they're increasing the business that is doing better for them, which is the vending machines that are there in offices. So at the same time last year, they had vending machines of close to 46,800 units. That has increased to around 52,600 units, aiding their margins, profitability, and return ratios as well. Now, with this kind of up move that has happened and with all things that are happening in the company, let's look at the key things to track going forward. One is the steps that the company will take to improve their liquidity and reduce debt, because the enterprise value of the company is close to around 2,500 crores. Any improvement in in-store metrics and growth is something that we'll be tracking. And finally, the impact of competition coming in from now mature and established brands in the country like Starbucks, Third Wave, and some other coffee chains which have recently raised funds from a round of private and HNI investors. So those are a bunch of things that we'll be watching in on Coffee Day Enterprises. Enterprise value of around 2,500 crores with problems on its balance sheet, but showing signs of improvement on operational basis.
Okay, all right. So that stock is up around 9%, a complete 360 analysis there on Coffee Day. But now let's